Hi there, welcome to Kneppy Invest and welcome to October 29, 2024. We have about 29 minutes left of training today. And overall, today has been a nice, pleasant day. No complaints from me. Everything seems to be in the green. Not all companies are in the green, not all sectors and indices in the green, but generally it has been a good day. And to be honest with you, this was to be expected because Dow Jones Industrial was up about 0.6%. Sure, the NASDAQ was flat, but I thought that Dow Jones performance will translate to our market. It has. Now, I thought maybe tech would be down a little bit, but it's up 0.16%. So no complaints from me about what has happened today. Probably the only complaint I have had is that I've been away from my computer since about 10 a.m. So I've not had a look at any announcements that have been released since then. And I do fully expect quite a few interesting announcements might have been released. So I'll actually touch upon that in a second or so. Now, the agenda for today's video, we'll go through the best and worst sectors, indices, and also companies. Have a look at the top 5 stocks of the day. Now, the top 5 stocks of the day were really obvious to me. In fact, I didn't even have a look at any other companies. These 5 companies and their announcements stood out absolutely. Now, I might find some more other interesting announcements that I might have missed that slipped through my filters as I have a look at some other information. But at this point in time, the 5 companies I have in the top 5 stocks, I will leave right there. Now, before I go through the top 5 stocks and the ASX today, also have a look at the earnings calendar for or in the United States or Wall Street, because we are heading towards a very important time of their quarter. In fact, fairly busy there, fairly busy here. The last few days of the end of the quarterly reporting month tend to be very busy because most companies tend to be procrastinators and they like to leave releasing their Appendix 4Cs or 5Bs to the last second. So particularly the last day of October, just like the last day of January, April, July, tend to be the busiest when it comes to announcements. You might see, or we might see, over 1,000 announcements released on October 31st. That tends to be quite normal. Any other day, sometimes you might see or be lucky to have 200 announcements being released. And I will go through a lot of those announcements. So I will be fairly busy over the next few days as well. Once we go through, or I go through the earnings calendar for Wall Street, have a look at training economics just to see if there's been any economic news that I might have missed. And then I'll go through Capital Brief as well, because I have been away from the computer since 10 a.m. And I just want to see if I've missed any news, particularly when it comes to the bigger companies on the ASX. And then I'll also go through, have a look at ASX announcements via ComSec that have been released since 10 a.m. since, just to make sure I have not missed anything. Okay, so let's start off with looking at earnings calendar in the United States. So this morning or overnight, we had some companies like Ford or Welltower, never heard of Welltower, or Waste Management release their quarterly results. But tomorrow, this is where we start to see the big companies release their quarterly results. I wish they just sort of spread it out a little bit more than what they're doing. So tomorrow we have Alphabet, Visa or Visa. Does anyone pronounce it Visa? No. Visa, Advanced Micro Services, Novartis, McDonald's, HSBC, and Pfizer all releasing their results at various times of day. When you see a sunshine picture, that's during trading. If you see a moon and a couple of stars, that's actually after market. And then on Wednesday, we have Microsoft, Meta, Eli Lilly, AbbVie. I might mention this in tomorrow's video, but tonight is really the start of a major period, an important period in the United States where we see significant companies releasing their results. And funny enough, it's only 1 week removed from their elections. Okay, so let's move on to economic news. Okay, I'm just going to refresh this just to make sure. I tried to refresh it before I started recording, but I forgot. I might have forgotten, but I didn't. Singapore, jobless rate, lowest in 6 quarters. Okay, that's interesting. Bitcoin hit 70,000 on huge ETF lows. Let's have a look at Bitcoin. I had a look at oil this morning just to see if it's fallen. And Bitcoin, yes, it's up to $71,000. In fact, this chart is starting to look pretty good. It's looking like Bitcoin wants to go on a bit of an uptrend, bit of a spurt. And that's after a period of time where the Bitcoin did nothing, just went sideways for about 6 or so months. What else is here? Oil rises after plunge. Japanese yen pressured by policy uncertainty. Asia markets mostly advance. Okay, and Texas manufacturing sector contraction softens. Okay, now let's have a look at Capital Brief. Now, actually, before we do that, I'm just going to set up ComSec and announcements. No, that's not the one I want. Tools. You can actually see how I get ASX announcements via ComSec. It is actually a little bit of a complicated process. You actually have to go to Tools, go to the company announcements, and then you can filter. Use a lot of filters. I like to filter via price, or only want to look at price-sensitive announcements. So use a market-sensitive filter, and you can see since about 10 a.m. So I'm just going to try to find the last announcement I did look at. I did look at Australian gold and copper, and that's it. So everything since then I have not had a look at. So for instance, I'm going to go through this very quickly just to see if there's any company that I have been waiting for that have released their Appendix 4C or 5B today. So I'm doing this very quickly. So for instance, Intelligent Monitoring Group. So there have been questions about this company. And then there's Titomic, did not release their Appendix 4C, but selling innovative cold spray solutions to US NAVC. I'm sure the share price has risen. Yes, up 12.12%. And what about Intelligent? Share price down 7.74%. So there's potential that this particular Appendix 4C might have disappointed the market. We also have had McMahon's AGM. Share price down a little bit. What else do we have here? So really, it seems like Intelligent Monitoring Systems is the main one. I might have missed one or two because I'm doing this fairly quickly. Beam Communications, they're in a trading hold. So you have time to look at that one. Image Resources, I think they are trying to get back into production, if I remember correctly. And yeah, nothing else there of note. So it's really that Intelligent Monitoring Systems. And with the share price down 7%, I'm assuming maybe it disappointed the market. So let's have a quick look at Intelligent Monitoring Systems. Share price down 8.4%. Okay, so they also had the AGM today and relaunches guarding. So maybe the share price is down because of something in the AGM. I don't know. I'm just going to do what I always do when I see these announcements. I just have a look at the cash flow statement. So $43.3 million of receipts. Operating cash flow positive, 761,000. So this company exists on fairly low margins. They also have a fair bit of debt, and they paid $2.2 million in interest and other costs of finance paid. So that is one thing I don't like about this company. It's their debt. And if you don't know anything about the debt or how much a company has debt, how much debt a company has, all you have to do is go to Section 7, sorry. And this company has $79.8 million of debt and no unused financing facilities. So they're using all their facilities. So that's a fair bit of debt for this company. But the main thing is the company has a lot of receipts, growing receipts, but low margins mean this company is not generating much cash in their operations. And if we have a look at the chart for IMB, chart has been looking pretty good. And still looks good, even with this down day today. But maybe this is the catalyst for a shift in sentiment. But we need some confirmation around that. Okay, so let's have a look at Capital Brief. Have I missed any news? So, for instance, I am going to completely ignore that the Employment Hero CEO Ben Thompson's bad dad joke lands with a thud. I don't care about stuff like that. That's nonsense. Okay, what I'm looking at is on the right-hand side. Analysis, upgrade, Zip forecast as US business drives growth. You won't be surprised that Zip is in my top 5 stocks of the day. It won't be surprised that Premium Investments is in my top 5 stocks of the day. So Premium Investment holds gains as Peter Alexander Smiggle figures impress analysis. Health Minister says Australia is less prepared for pandemic than before. How so? Okay, whatever. Paladin extends losses. Cettire, RBC negative on Cettire Q1 results sees 48% downgrade to first half EBITDA. Not a surprise, Cettire is in my top 5 stocks of the day. So can we get all my 5 companies? So there's 2 more. I don't think we'll see the other 2 here. There's Bitcoin, Sandfire Resources shares dip as Q1 misses estimates. I actually did not write that down, Sandfire. Coronado shares dip on Q3 output cuts. Yes, I actually did put that down. And Mineral Resources shares climb as clarifies tax evasion allegations. Zip shares rocket. Ramili shares drop. Ansell shares lift on revised earnings guidance. What's this? My Premier Investments saw. For some reason, I thought that said sour, and that didn't make sense. And BlueScope shares dive on earnings guidance downgrade. Okay, so there's a few companies that did not make even top 5 stocks. For instance, we had a company called Credit Corp, had their AGM. BlueScope Steel had a downgrade. We also saw Ansell release a trading update, maybe even the AGM, and it was actually a pretty good trading update. And quite a few companies, mining companies, released activities report. Coronado, Ramelius, Resolute, and Sandfire. And quite a few companies released their Appendix 4C 5B that I have not included in today's video and I won't talk about. We're talking about Tribune, ReCloud, Bird Dog Technologies, AML3D, SciDev, which is a company I own, Safe Roads, Field Solutions, Locality, something or other. I'm just going to have a quick look at SciDev because that is one company I do own, and they did release their Appendix 4C. Share price up 8%. I actually am a little bit surprised by that. I thought it was okay, not superb or spectacular, but so I'm very happy with the share price up 8% with that. Okay, so let's get to the ASX today. And yeah, I'm just going to refresh this. I'm not sure if it refreshes on its own. Oh, tech's had a nice, small caps and tech have had in fact, the whole market's had a bit of a bounce since I started recording this video. That's pretty good. Okay, so let's have a look at the best and worst performing sectors and indices today. And I wouldn't say it's a bifurcated market. So some sectors have done well, some sectors have not done well. So discretionary, the best performing one, and utilities, the worst. Also, energy has been a little bit weak today. And I'm wondering if that's maybe because of oil. Otherwise, nothing significant there. We could have a look at what has led to discretionary having a good day, or even utilities not having a good day, but I might move on. ASX 20 up 0.48%. I'm not going to assume anything. We'll probably see the banks having a pretty good day, the big banks. Goodman Group having a pretty good day. What's discretionary? West Farmers having a good day. Is that in discretionary? I have a feeling it might be. So let's have a look. So it's up 0.5%. I'm assuming 15 companies, 14 up, 6 down. Oh, 16 up, 4 down. So which 4 companies are down? REA Group, Woodside, Telstra, and CSL, although CSL is only down 0.01%. And the best performing company, by far, the best performing company is WiseTech. So it's bouncing really nicely after that panic selling in regards to the CEO and his what do they call it? I forget. Inappropriate behavior. So non-illegal, inappropriate behavior. I'm still not sure what that exactly means. And also Aristocrat and Goodman Group have had a good day. Commonwealth Bank up almost 1%. And there's Wesfarmers up 0.74%. Okay, so let's go to and have a look at the best and worst performing companies on the ASX today. Start off with the top gainers. See if I've missed anything here. More than likely, I have missed quite a few mining drilling results or something like that. For instance, LIS Energy up 51% on fairly big turnover. Now, this company has a market cap of 179 million. I don't know anything about it. So let's see what LIS Energy has released. I'm assuming lithium, what's S? I'll say sulfur. Doesn't sound right. Oh, it is sulfur. LIS achieves 500 watt-hours per kilogram lithium sulfur cell performance. So it's in the name, lithium sulfur. I don't know anything about this company. They also released an investor presentation 1 week ago. The market likes this announcement. I know nothing about lithium sulfur energy. Let's have a look at the chart. Is this a chart to like? Well, it wasn't until about 2 days ago, and then all of a sudden the share price has taken off. Wait. They released that announcement yesterday. So this is another good day. I just didn't realize that until right now. So yesterday, share price was up 54%. Now it's up another 46%. So it's seen the share price rise over 100% in 2 days on the back of this announcement. And also the volume today was greater than yesterday. I'm not sure if I like that. Usually you want to see the bigger volume coming in the day they release their announcement. I would imagine there is a bit of day trading going on here. That's what I'm imagining right now when it comes to LIS Energy. If you have a look at the 1 minute data, the chart, yeah, the share price took off and reached a high. Share price reached a high at about 11 o'clock this morning and then has pulled back. And when I say 11 o'clock, I mean local time. So that's 2 hours after trading began, and the share price has pulled back after that. So that's lithium sulfur energy, or LIS energy. Where are we? Let's go back. What else do we have here? PPK Group up 32.9%. Turnover there has been okay. I'm just going to have a quick look at PPK Group. And nothing for PPK Group. So let's move on to see if there's another company. What about Aura Gold? Share price up 22%, although the share price is fairly low, 1.1 cent. Serko, there it is. Serko is in my top 5 stocks of the day. Fairly low turnover, but they did release something. Oh, results, half-year results. Serko did release a half-year results, and that is in my top 5 stocks. So I could talk about that company later. Field Solutions released their Appendix 4C. Was it last night? I have a feeling it was after trading had finished for the day. Yeah, they released at 5:45 p.m. And no, that's the activity report. The cash flow report released at 4:21 p.m. So the market likes it. Market likes Field Solutions. I'm trying to remember if I liked it. Did I write it down? No, I didn't write anything down when it comes to this company. So, and this is the chart. Well, that's a 1 minute chart. So let's have a look at the daily chart. And no, I don't like this. Maybe because of a little bit higher volume coming in the last few weeks. So maybe we are nearing the bottom for Field Solutions Holdings. Anything else here? No, that's about it. There's Titomic. Vinyl Group down a bit yesterday, up today. Now let's have a look by market cap. See if I'm missing anything. MinRes up 7.53%. They did receive an ASX query. I think it was mentioned in that capital brief. I have a feeling it was an ASX query. Yep, response to ASX aware letter. And I think the ASX just wants to know why this wasn't reported or something like that. And it seems like the market has liked it. They have liked the response to this ASX aware letter. And let's go back to the top gainers, Premier Investments. Yep, both in my top 5 stocks today. Both of those companies are up about or over 10%. Pantoro, Cobram Estate, and there's Serko. Wagner's another good day. Wagner's is on a really good tear, isn't it? So let's have a look at the chart for Wagner's. This was on my radar. And yeah, the share price is just, it's taken off. My only problem probably is the volume. We're not seeing a really big volume coming through. I'm not sure what caused this rally. And even the volume on those days was not that big. So something might have, I don't know, there could be some news out there that we just have not seen in regards to Wagner's, or I have not seen anyway. And maybe I'm pretty sure they have not released anything. Did they receive a price query? Yeah, they've received a price query. That's about it. And what else? There's Biome, SciDev. Yep. Okay, so let's have a look at the what do you call it? The top losers today. A company called Siren Gold, down 27%. On pretty good turnover, fairly small company. Let's have a look if Siren Gold have released anything. I have not heard of this company. So, we're in the closing auction. And Siren receives revised proposal from Federation of Mining. The market has not liked that, it seems like. And the share price is down for Siren Gold. So not all gold companies are doing well. Let's have a look at the chart. Well, it was starting to do well, and then all of a sudden today, that positive momentum has come to an end with a thud. Okay, let's go back to the top losers. Don't have to talk about good drinks because that is in my top 5 stocks of the day. We'll talk about why the share price of that company is down 26%. And it's not a surprise. It is down 26% because of what they've done. And of that, their Cettire, down 40%. I'm not shocked with that. And again, that is in my top 5 stocks of the day. Now by market cap, Drone Shield. Oh, Drone Shield. What's happening with Drone Shield? So I have really stopped following Drone Shield at the moment, and it looks like the trend has been significantly broken. Oh, that's not absolutely true. Share price was actually down as low as 86 cents the other day, 85 cents. But I don't like this chart. It's in a downtrend. It's moved into a downtrend. And that means I have no idea how low the share price can go. And today, like a day like this, is not a good day for Drone Shield, down 6.7%. I'll talk about Cettire, AMA Group, still in an uptrend. No, not concerned about that. Demerics, I was thinking about Demerics the other day in regards to whether I think the share price could go higher or maybe go lower. I wasn't certain either way. And Accusensus. And Money Me down a little bit today as well. And Kingston Resources down to 10 cents. Ooh, that could be an interesting one, Kingston Resources. I did show a Kingston Resources chart in the technical update video, and this is their chart. Cool. Maybe it's a buy the dip situation for Kingston Resources. Okay, that is the best and worst of ASX companies' performances today. Let's go through or go to the top 5 stocks of the day. Now, before I do that, actually, no, what I'll do is I'll go to the top 5 stocks and then I'll do an honourable mention, go through some of the charts of the companies that did not make it, and then I might have a look at some of your comments. Okay, so let's have a look at the top 5 stocks of the day, starting with Good Drinks Australia. Share price down 28%. Not a shock. Why is it not a shock? Share price down because the company has decided to voluntarily delist from the ASX. Why are they voluntary delisting? Well, there's one main reason companies decide to voluntarily delist is because they believe the market doesn't appreciate the company and it's undervaluing the company. That's exactly what this company's management is thinking. So they actually mentioned here somewhere, yep, in this paragraph just below the background and rationale for the delisting, the company's board of directors believes the company remains significantly undervalued by the market when compared to typical industry metrics such as sales volume, revenue, market share, and brand positioning. That's it. Maybe there's some other smaller reasons, but that's the main reason. We think the market is undervaluing us, so we want to get off. We want to delist. And it's not a shock the share price is down 27.7% because research has been done on this. And research shows that the price premium of being listed is about 35%. Or another way to look at it, there's a 30 to 35% discount if you delist. So typically, you'll see the share price drop 30 to 35%. We saw that with Adacel the other day. Share price dropped, was it 30 or 35%? I think it was in between that. Trade history, 36%. And today, Good Drinks, we're going to delist. Share price drops 27.7%. So if you think that the company was undervalued before, well, what do you think now? So it's a ridiculous reason to delist. If you do think a company is undervalued, buy your shares back. That's the way to go. Don't delist because you are screwing over most of your shareholders. I've heard horror stories about companies delisting. Anyway, so I'm not the biggest fan of this line of action from any company that is delisting because the management believes the company is devalued or the market doesn't appreciate the company. The best way to get the market to love your company, to see the share price appreciate, is to financially hit it out the park. And Good Drinks, to be honest with you, is not doing that. I have a look at their results all the time, and I've never come away impressed. I don't care about how much more litres they're selling, that sort of thing. They are not profitable, barely profitable, if profitable at all, generating very little cash flow, that sort of thing. So, yeah, I would be pissed off if I was a shareholder of this company. And if you look at the chart is a dead giveaway that this company and the management, I suppose, is not really performing. And this is the chart. Funny enough, a few days ago, the share price rose 18%. Can you just imagine buying shares at 34 cents because, oh, it's rising? And this is a chart. This is not the chart of a good quality company. Share price has been a downtrend since the start of 2022 when the share price was in the 90 cents range. Now it's 28 cents or whatever it is now, 24 cents or something. Anyway, so that's Good Drinks coming in at number 5. They are delisting because the company is undervalued. Yep. Coming in number 4, we have Cettire. Interesting reaction from the market. Share price down 16.4%. Not a shock. And because we're in the closing auction, we'll not be surprised to see the share price fall lower than this. Share price is near the low of the day. Funny enough, the share price opened higher when it started trading. And as it's mentioned here, Cettire shares sink as EBITDA drops 77%. And there's another one up here somewhere. Where was it? And RBC negative as Cettire Q1 results sees 48% downgrade to first half EBITDA. So this was not a good announcement from the company. Anyway, and this is what they said. RBC says, ultimately, based on CTT's, Cettire's current second quarter run rate and margins, we view today's update as a 5% downgrade to first half revenue and 48% downgrade to first half 25 EBITDA. So first quarter was in line with Cettire's trading update with sales plus 20%. However, we believe the market will be concerned with Cettire's 5% growth rate in October. So this is sort of announcement where I do think you need to know a little bit more about the company. And that's why I think the share price actually rose on open because when I did have a first look at it, I went, well, seems okay. Seems okay of an announcement from the company. Now, I think that's because they spun it to look or sound it positive. So Cettire achieves profitable Q1 growth amid optimization of operating settings and increased emphasis on profitability. If you look at the revenue numbers, nice growth there, up 18%. Sales revenue up 22%. Average order value up 6%. Active customers up 43%. This is compared to the previous corresponding period. Adjusted EBITDA, $2 million. $1.6 million increase on the fourth quarter. So there were things to like if you just look at it. But then I had a look at some of the analysis and there were quite a few negative thoughts about this particular release from Cettire. So again, this shows you that even though you might have an opinion about an announcement, and I thought this was not that bad, it's essential to understand what the market thinks about it. And the best way to understand what the market thinks about an announcement is just have a look at the share price action. Share price down 16.4%. And there would have been some people who bought on open and thought, oh, this is a good announcement, I'm going to buy. And they have been, I wouldn't say destroyed, but they're not feeling good right now. Now, in saying all that, I'm just having a look at a chart right now. The share price is at a very important level. $1.80 or around $1.80 is very important for Cettire. That is a nice little support level. Was resistance, then it's become support. And if the share price falls below $1.80, looks like it might. That's going to be close. Looks like indicated price is about $1.76. This would be a little bit negative, but we need to see how the trading goes over the next few days. So this could be a negative move when it comes to Cettire's chart. And if you have a look at the 1 minute chart, it's been falling. Look at that. Look at that. So there was the initial positive reaction. Share price actually opened up. And then within 5 minutes, the share price reached its low of the day at $1.78. However, we might see the low during the closing auction. The closing auction is in the next 1 minute. And that would be negative. If you see the low of the day at the close of the day, that's negative. In fact, this 1 day candlestick is negative. So really interesting trading when it comes to Cettire. We even saw a bounce. You can see a bounce. So a lot of selling, and then there was a bounce from 9:07 all the way through to 10:30. So 1.5 hour bounce. Share price went from $1.78 back up to $1.96. And since that bounce, share price has been pulling back. Funny enough, the share price bounced into the longer term moving average channel, and it's been drifting lower ever since. All right, so that's my main thoughts when it comes to Cettire. I was always going to include Cettire into the top 5 stocks. I thought maybe there was going to be a positive response, but it's turned into a negative response. And share price has closed at $1.77, which is the low of the day. So very important level where Cettire is right now. Now let's move on to company coming in at number 3, Serko. Released the half-year results today. Share price up 21.95%. Pretty sure this is also traded on the New Zealand Stock Exchange. And if you do follow this company, or maybe own some shares in this company, you probably saw or knew this company released their results today. And then you probably were really focused on what was happening to Serko's share price on New Zealand Stock Exchange, up 15.33% there. So if you saw it open up on initiation of trading, you probably were a fan. You're probably really loving life at that point in time because you knew the share price was going to open up higher on the ASX. Okay, so Serko, they're into travel stuff. The one thing I remember about Serko is announcing a deal with Booking.com in 2018 or 2019, and that was a big deal. In fact, you'll be able to see that on the chart for Serko, not the 1 minute chart. If you go back to the daily chart and go all the way back to 2019, or it must have been 2019, I think it was this. I have a feeling it was the 25th of October 2019. Share price rose 44.9% after the previous day falling 15.2%. I can't remember what happened or why the share price dropped, but I definitely remember why the share price rose, and it was a deal with Booking.com. And then we had COVID-19, which sort of, I wouldn't say destroyed this company, but it really negatively affected Serko. Okay, so let's go have a look at this company results. I wouldn't say the shares are liquidly traded. In fact, I can't remember which announcement I read here. Serko. Can't remember which. Oh, this one. Yeah, this one. Oh, this is just the numbers. Okay, so let's have a look at the numbers first. So this is half-year numbers. So income, that's revenue, 42.7 million. So nice growth. So we're talking about 18% growth in the first half last year. Operating expenses up 12%. EBITDA positive. Net loss after tax, a $2.1 million improvement. Free cash flow positive and adjusted free cash flow positive. And that's both improvements, significant improvements from the previous half year. Not only the previous half year, also half year or the second half of financial year 24. So the most important thing here is free cash flow positive. So the company's moving in the right direction, not quite profitable, but free cash flow positive. The other thing I liked about this announcement, and to be honest with you, this is like the first time I have really ever looked, not in depth at this company, but I had a very quick look at this announcement, this presentation, and I'd really like having these sort of aspirations or goals. So financial year 30 total income of 250 million. That would be nice if it was total profit, but total income is like it's revenue. And so this particular half year they had, 42.7 million. So they do expect a significant growth in revenue over the next 5 to 6 years. And I would expect if they do deliver that sort of revenue growth, this company would be highly profitable. Their main title delivers positive EBITDA and cash flow in first half and shows acceleration of total income into the second half of 24. So the market likes this. I'm going to have a closer look at this particular announcement, and I'm just looking down below here at some comments from the CEO, and he actually mentioned Bookings.com here. We are particularly pleased with the positive trajectory of Booking.com for business under our long-term partnership. So things are moving in the right direction for Serko. Now, I had a quick look at the chart when I brought it up before, and I noticed the share price had been falling. Share price in a bit of a downtrend. So I thought maybe this would be a breakout for Serko, and this is not really a breakout. Share price had been in a downtrend. Share price has popped up today, but it's still in a downtrend. That's the unfortunate thing here, because there would be a fair bit of resistance moving forward, because a lot of shareholders probably would have bought in higher prices, and they are thinking this company's a dog stock, and they want to get out. So over the past year, most of the shareholders in this company, who have bought in the past year, are still underwater, and they want to get out. And that's the difference between this sort of chart and a chart where the company has reached a 1 year high. There's no resistance or very little resistance moving forward. So you won't see as much selling. In this sort of situation, you're going to see selling, which will put a pressure on the share price. And the best way to overcome that pressure is you need a lot of buyers coming in. You need a lot of enthusiasm of buyers. And I'm not sure you're going to see that with Serko at this point in time. But a good day for Serko, a good 1 day for Serko, but overall the chart, not enthused by the chart. So Serko coming in at number 3. Zip. Zip, zip, zip. Okay, I am trading Zip. Share price up 11.8%. So we'll have a look at the chart in a second. All I'm doing is trading Zip. I don't care about the financials, don't care about anything like that. But it's really good when you're trading a company and the company releases a pretty good result, quality result. And that's exactly what Zip has done, particularly when it comes to United States. Okay, so which one will I open up? I can open up both of them, I suppose. Okay, so they have all these different metrics they look at. For instance, we're talking about revenue, TTV, transactions. They might even have a little bit more active customers, merchants. And I do like how they break it down into different regions. So we have US and ANZ, Australia and New Zealand. So very little growth in Australia and New Zealand. So this company needs to expand into US, and they're doing that. So you have a look at the different metrics or the growth in these metrics. Revenue, United States has grown 40.5% in the past year. Australia and New Zealand down 1.5%. So this company should be, I wouldn't say solely focused on United States growth, but Australia and New Zealand, it's mature. It's matured to the point where they're seeing very little growth or any growth at all. US, you want to see that continued growth, 40.5% growth in revenue compared to previous corresponding period. 13% just in the last quarter. So a bit of an acceleration of growth in the last quarter. Total TTV is total transaction value, up 39.5% in US, down 3.1% in Australia and New Zealand. Transactions, 39.8% growth in US, up 3.3% in Australia and New Zealand. And then you keep on going on. Active customers, a nice sort of growth in the United States, and merchants growth there as well. Net bad debts down. Well, down from last year, but up a little bit from the fourth quarter. So I went through this fairly quickly. I liked what I saw. I'm going to be honest with you. I liked what I saw, and I thought, I think the market's going to like this as well. The other thing I did is have a look at their Appendix 4C, and I like this as well. Okay, so here's the most important thing. So if I just saw this without knowing which company it is, I would like it a lot. So receipts to customers, 240.45 million. Operating cash flow positive, 63.8 million. Yeah, operating cash flow positive, 63.8 million. Now, that's not the end of the story. You have to also look at investing and operating activities. So, for instance, cash loans from loans to other entities, 17.9 million. Not sure what that is. They have a lot of financing activities here. So, did a couple raising, a lot of proceeds from borrowings, repayment of borrowings, transaction costs related to loans and borrowings. So overall, cash is still the same levels or very similar levels, down a little. But the most important thing there is operating cash flow positive and still a lot of cash on their book. So I thought this was a pretty good report, and the market thought it too. Share price up 11.8%. So let's have a look at the chart. So all I'm doing is trading this. I'm not holding this for the long term. So what I want to see is the share price just go on a massive run for like next 5 years. So I started trading this back in probably November, December last year, took some profits, was out of it for about 4 months, got back in July, $1.75. Because at that point I thought, yeah, I think there's a lot of momentum behind this company. And I think just by looking at the chart, the share price could go higher from here. And it has. And this is a really nice looking chart. So share price now at $3, what was it, $3.11? Was it 12 cents? And I do have a sell price at $2.50. So eventually I will raise that as the share price keeps on going higher. So that means I will have a profit whenever I sell a Zipco. But that's the question. When will I sell? It all depends on how far the share price rallies from here. Could go to $10, $20. This could be the high, and maybe the share price will drop from here. I just don't know. So Zip coming in at number 2. Coming in number 1, Premier Investments. Share price up. Oh, I was hoping it would be up 10%. I'm not disappointed. I'm not a shareholder of this company. However, what they're doing, I'm a very big fan of. When I say very big, I mean huge fan of. I've been told never use the word very by a writer. It's lazy. They consider it lazy. Writers consider the very lazy word. I just said very again. Writers consider very an extremely lazy word. Maybe adjectives is not good use of words either. I don't know. I'll just do whatever I want. So premium investments are up 9.91%. I wonder what Myers did today. Down a little bit. Okay. So the big news today when it comes to premium investments and Myer is that Myer is sort of spinning off. No, premium investments is spinning off their apparel brands to Myer. They're also getting a lot of shares back from Myer, something like 890 million shares. And what they're doing is they're spinning off the weakest part of the business. That's the way I see it. And what premium investments is left with, Smiggle and Peter Alexander, is by far the highest quality of the company. And that's exactly what you want to see. You want to see a company sort of sell off their weakest bits and maintain their best bits. And that's why I like this particular decision from Premium Investments. They also raise the possibility of a further spin-off. So sort of separating Smiggle and Peter Alexander into two separate businesses. I would like that as well. Now, there was a mention in Capital Brief somewhere here. Where was it? Premium Investments holds gains as Peter Alexander Smiggle figures impress analysts. Well, it should have been impressing analysis for the last 5 years, because I remember having a look at this company probably well over 5 years ago and just thinking, gee, this Smiggle, Peter Alexander, they're doing really good, and they've continued to do really good since then. So let's see what they said. I did have a very close look at this announcement. Peter Alexander and Smiggle recorded financial year 24 EBIT margins 30% higher than Citi's estimates and earnings much higher than E&P Capital forecasts. Meanwhile, Myer shares traded lower. Okay, we already knew that bit. Mentioned here that Myer and Power Brands will be stronger together. No, don't really care. Premier will continue to own. This is the other important thing about Premier. They have a pretty big holding in Breville, and I like Breville. In fact, I'm a Breville shareholder. So the one way I could play this is buy some premium investments. That way I can own Peter Alexander, Smiggle, and Breville. So that's what I could do with my Breville holding, is just sell it and then take a position in premium investments. Anyway, yeah. So that's premium investments. I do like this decision. So let's have a look at the chart. Is this the time to get excited? I actually did have a look at the chart when shares started trading. So I went away from my computer about 10:15, and I realized a very important price for premium investments is about $36, just in terms of the chart, because that was the highs the company saw back in August. And you can see the share price or the chart actually is not a positive one-day candlestick. It's actually a little bit negative. In fact, it looks like the share price might close at the low of the day, fairly similar than what we saw with Cettire, which means there has been more enthusiasm from the sellers than there have been enthusiasm from the buyers. And when you do see more enthusiasm, the share price will drop. That is what we're seeing today. Pretty big volume coming in. So my biggest question here is, should I sell my Breville, just buy some premium investments? Because that way I can get exposure to Smiggle, Peter Alexander, and Breville. Now, I did notice that Breville share price has pulled back a little bit. Yes, but still in a nice uptrend. Anyway, so that's all I have when it comes to the top 5 stocks of the day. Now, I'm going to have a quick look at some of the charts for these other companies that I thought could have made it into top 5 if one of these companies that did make it did not release an announcement. So let's start off with Credit Corp. Share price up and down during the day, yeah. So in the end, share price dropped 2.2%. Okay. I thought it was slightly positive. BlueScope Steel had a profit downgrade. I expected share price to drop a lot. And then I had a look at the share price earlier, and share price rallied. In fact, the share price, it was down 0.52%. I'm not sure why there was a lot of buying today, because this was a downgrade. It was a pretty big downgrade at that. BlueScope Steel. Ansell had a nice little trading update, maybe even the AGM. Was it the AGM? Yeah, AGM and trading update. And just like premium investments, we have seen a little bit of selling. Share price did get to a long-term high today, but a bit of selling has sent the share price down a little bit. But a positive trading update from Ansell. And what else? That's about it. Also, that's in regards to other announcements, but A few mining companies released their quarterlies. For instance, Coronado Global, down a little bit. Why? Yeah, I've got to increase this because I can't see how much the share price fell. There we go. Share price of Coronado down 5.97%, and this chart does not look positive at all. We also had Ramelius, and I think this share price was down a little bit, almost 1%. Resolute. By the way, both of these charts look pretty good. Resolute up 1.18%. What was the other one? Sandfire, which I actually did miss, by the way. Writing it down, I didn't miss the announcement, but I just wrote it down. Oh, share price down 3.9%, although share price was up at one point today. And a few companies released their Appendix 4C, which I've sort of showed you SciDev. So let's have a look at the chart for SciDev. And yeah, nothing too exciting right there. What about AL3? AML3D. Yeah, slight drop there. And maybe that's it. Yeah, that's it. Okay, so let's have a look at some of your comments. Why not? I've got a bit of time on my hand. So Liam Jones says, still can't believe I sold Findy at $1. Had no idea what I was doing and still thought it was done at $3 and $4. So depressing to look back on. And Stephen M. Reinhardt says, live and learn. Now, I would say the vast majority, if not every single investor, will have a story like Liam Jones. In fact, I would say if you're highly experienced, you've got numerous stories in regards to Liam Jones. I have sold out of about 3 or 4 companies within the past year whose share price kept on going up. The last one was Hub. I still don't know why I sold Hub. Still don't know why I took profits. And I took profits somewhere back in April at about $44, at $69 now. I still don't know why I took profits. Recently, I took profits. Who did I take profits with? I can't remember. Now, Hub is the one that really stands out to me. Hub, Service Stream is another one I took profits with. Another one is Codan. Took profits with Service Stream, about $1.24, and now it's $1.52. The other one was Codan. This was a classic case of Codan. I held it for a long time, and you can see the share price, it's going up, but it's going up slowly, and I just got bored. I'll be honest with you, I got bored, and that was a stupid decision because you don't sell because you're getting bored. That's amateur. And the share price, I sold probably about $8, and the share price now $16. So that's a bagger lost, 100% gain lost just because I became bored. So the moral of the story is you're not really an investor unless you have a story like this, selling too soon. Now, on the flip side, sometimes you sell at the right time. Sometimes you don't sell quick enough. It's almost impossible to get it right, the timing. And I think the important lesson I have learned from all these instances, Codan, Service Stream, and Hub, I had no sell signal when I looked at the technicals. No sell signal at all. And that is why I'm thinking to myself, why did I sell? Now, if I sell because I do get a signal, that's okay. I'm fine with that. So that is a lesson I have learned. And that is why I am really paying close attention to my sell signals. For instance, with Findy, even when I took profits, I didn't have a signal. I just went, nah, it's getting too high of a position in my portfolio. I should take profits. So what I'm doing with Findy is now I've got this blue line, which is my sell point. And I'm raising that. Almost raise it today to there. So almost raise it from 340 up to 480, which I think I'm fine with because I think the previous price was a little bit too low. And the reason I'm raising to that level is because that was the highs the share price saw back in June. And then we saw a pullback. It had trouble getting above that level, but eventually went on a run. So I'm okay having it right there. And what I need to see for me to sell Findy is the share price not only to fall below that, but stay below it for maybe a week or so. The other way it could fall below it is just a really bad announcement. But yeah, at this point in time, I'm going to just focus. If I don't get a sell signal, don't sell. Only sell when I get a sell signal. Now, funny enough, I actually, the other day I took profits with EZZ without a sell signal, just like I've done in the past. And this was okay because the share price just rallied way too quickly and I sold at 460 up here. I just expected a drop in the share price and we saw a drop in the share price. And the question now is, should I buy back in? Buy some more shares in EZZ? And the other time I've sold, because I just didn't like how far the share price was running, was Drone Shield. I sold Drone Shield on the 15th of July at about 250, I think. And share price now 91 cents. So even in these two cases, EZZ and Drone Shield, I did not get a sell signal, but the reason I sold, there was a reason I sold, and the whole reason I sold, not complete with either, although I've completely sold out of Drone Shield because the share price dropped a fair bit. And the reason I took profits is because the share price ran up way too quickly for my liking. I don't like when the share price runs up like this. So anyway, I learned, have rules. That's the most important thing. Have rules. Okay, Roger Rogoldo. Oh, he's trying to tell me how to pronounce this. So yeah. Anyway, War of Warcraft or something like that. Samarco was one of those rare industrial disasters, that was so horrific. Its impact and recovery has changed tailings management. Interesting. I had no idea. All over the world now, companies are racing to deploy dry stacking and zero liquid discharge solutions to prevent it happening again. So this is one of those situations where something really bad has happened, but the good thing is very positive things, again, very, really positive things have come out from it. Like whenever there's a plane crash or a plane disaster, usually there are changes made. So there is prevention or things have changed. So preventative measures, that's the word I was looking for. Preventative measures are implemented so it doesn't happen again. The worst thing is, however, people sometimes have to die for those changes to be made. And it's one thing I don't like. Sometimes we're too reactionary instead of being proactionary. And this may be one of those cases where something bad had to happen for changes to be made, which is unfortunate. Mr. Choke Sinakura, what do you think about AI media? I'm seeing lots of news, lots of good news on Twitter. I would like to see lots of good financial news on Twitter. The chart looks really good. So my question is the financial or the Twitter news, is it because of the chart? Because the chart looks really good. Really good volume coming in, chart looks really good. But do the financials measure up to all the hype? I don't know, actually. Do they release? Let's have a look at the most recent full-year results. Does the financials measure up? So revenue of 66.2 million, up 7%. Gross profit of 42 million. I was going to say profit 42.5 million. Wow. Gross margins of 64%, up from 60%. So some really good things here. So nice growth. I'd like to see better revenue growth, but gross margins, a nice increase there. EBITDA to 4.1 million. Operating cash flow of 3%, or growth of operating cash flow of 3%, to 3.6 million. Cash balance of 10.9 million. So it seems like there is something there just by looking at these financial results. And the market has responded. You could have bought on the release of their financial results at a share price of 44 cents, and the share price has doubled. Markup is almost 200 million. So there is potential, maybe you'll lay, I don't know. But just looking at the chart, chart looks good. So if I bought something or some shares in this company right now, I'd probably have my stop loss right there, about 68 cents. So there's a big difference between the price you're paying for and my stop loss. Anyway, that's the way I would do it if I wanted to trade AI media. Long term, no idea. It's got the right word in it, or the right acronym in it, AI. I wonder if that's why there's excitement. Thornley Photography. I'm looking at uranium stocks in Simply Wall Street, which I know you don't use. I want to know if their financials look very different to other business in your eyes. Simply Wall Street displays Boss Energy and Paladin as profitable, whilst cash flow negative and with zero revenue. Of course, this doesn't make sense. So there must be something about their accounting that doesn't translate into the graphs I'm looking at. Do you see something unique to these stocks? The only way I can make sense of that, profitable while being cash flow negative and zero revenue, is if they're increasing the value of the property. So that's how you become profitable. So if you have a lot of property on your balance sheet and then the value of that property increases significantly, that's actually a profit. And you could have actually no cash flow and no revenue, but still you have a profit. So but I don't know if Boss Energy and Paladin would do that sort of thing. What I'm going to do right now is have a look. Actually, what I could do is have a look. Paladin, why not? Share price down another 4.9% today. Have a look at the most recent yearly results. Or they've got an annual report, 148 pages. The other thing I could do is, where's FinChat? Well, it's opened up quicker than I thought it was going to on ComSec. I'm just going to see what it says in FinChat. Financials. Yeah, so in FinChat, they do have a profit of 53.6 million. So it's not property. I would say there's some unusual goings on here. Asset write-down. So for Paladin, it looks like it's an asset write-down or something like that. In fact, let's go all the way to their financial statements. Here we go. Okay, so the first thing, revenue, no revenue. So that's the most important thing here. There's no revenue. They're not selling anything. So how do they have a profit? So here we go. Impairment, reversal on stockpile. So they did an impairment a few years ago probably, and they wrote down some of their stockpile, and they decided to reverse that. 92.2 million. That's why Paladin is profitable, is because of an impairment reversal on stockpile. I would ignore that profit. And this is the reason why I don't tend to focus on profit or loss, because it can be manipulated with these sort of things, with one-offs. That's a one-off. So you have to ignore the profit for Paladin. And more than likely, it's the same thing for Boss Energy. Have a look at why they are profitable, particularly if they have no revenue. So some companies, particularly REITs, you might see them profitable by a significant amount or loss-making by a significant amount, simply because they are changing the value of their property. In fact, I'd say a lot of REITs did that, and they might have been loss-making in the past year. In fact, let's have a look at one. I'm going to have a look at one. What can we have a look at? Well, I forget the names. TIG codes. Just the pressure's getting to me. The pressure's getting to me. I do have a REIT watch list. DXC. Let's have a look at DXC. I'm just going to find one that had a loss. And what you'll see is they had a loss because they had to write down. I might look forever here. So this company had a loss last year of 600,000. And you see a lot of times these companies, let's have a look at a bigger company. What about CIW? Is it CIW? CLW. Charter Hall Long Whale REIT, nothing to do with the creature whales. And let's have a look at their profit. Okay, so here's one. So this company had a loss of $511 million in the past financial year. That is exactly what I wanted to see. So why did they have a loss? Is because they had a change in value of their property. That's what I'm going to be guessing right now. It's a loss, but it's a weird one. Full year statutory accounts. Here we go. Yep, loss for order activities, 511 million. So we go to their revenue. So they had a fair bit of revenue, 219 or $220 million of revenue. So this company actually has revenue, but they had a big loss. So what's their loss? Net fair value loss on investment properties, 441 million. And they also had a net fair value loss on derivative financial instruments, 39 million. So a lot of times you will see these sort of companies, you can see their profit loss just jump up and down like a yo-yo. So this is one of the reasons why I don't really look at profit or loss, because you'll see these big jumps and drops like we saw with Charter Hall REIT. So 2 years ago, profit of almost 1 billion, now it's down to 500 million. Just doesn't make sense if you just look at this. You can't determine what the profit is going to be or loss is going to be in the next few years. You just have no idea, because who knows how they're going to value their property. I don't think they value their property. I think there's someone else who does it. Anyway, so hopefully that has all made sense. So accounting-wise, it actually does make sense why Paladin had a profit. And I'm assuming Boss Energy is the same. Okay, so that's all I'm going to say. So sorry, Just James Dean and Lazy Eyes and Sensei. Your questions will have to be waited to another day. All right, that's all I got for today's video, because it's just gone for over an hour. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.